Hi, thanks so much for tuning in. You're watching BQ Prime, and this is an earnings conversation. My name is Mathew. We're talking about Welspun Corp. And traditionally, you've looked at this company as a pipes manufacturer. But there's more to talk about with regard to this company because it's added several businesses in the very recent past. And to that end, I don't think that the numbers are strictly comparable on a year-on-year basis. But to talk about the key details, I'm joined by the management. Vipul Mathur, Managing Director and Chief Executive Officer of the company, is joining it. Mr. Mathur, thank you so much for taking the time. Very strong growth if I look at the year-on-year numbers, three times growth in the top line number and significant growth in the PAT number. The margins have grown to double digit, or rather very close to double digit, 9.06%, all strong. Would you say that they're not comparable though, and how do I look at your numbers?
Alex, thank you for having me on this show. And it has been a very spectacular performance in the quarter one. Of course, the numbers are not comparable in comparison to the last year. But nevertheless, having said that, I think so all the segments what we are at this point in time, which being the oil and gas segment, the water segment, the DIP segment, the building segment, which is all about Syntex, the specialty steel segment. I think so all these segments, are doing extremely well at this point in time. We are seeing a tremendous amount of tailwind across all the geographies. And we being into a pole position in most of these segments, I think so we are trying to capitalize upon it. And that is very clearly getting reflected into our earnings for the very first quarter.
So in a conversation that you'd had with BQ Prime after the fourth quarter, you talked about the fact that you very aggressive in terms of the expectations for this financial year because of the businesses that you've added. 15,000 crore rupee of top line is the guidance for FY24 and 1,500 crore rupees of EBITDA. And you've said that 40% of this is going to come from the new businesses that you've added. I would think that with businesses like Syntex, where there is a trajectory of a build-up over a period of time, it's going to take some time for that ramp up to take place. So in the first quarter, what's the contribution of these new business lines that you've added?
So in the first quarter, I think so the major significance or the contribution has come from the pipe business, and very expectedly so, right? And this split or this dynamics will keep on changing as we go into the subsequent quarters. But I think so the first two quarters would be very heavily dominated on the pipes, and then all the other new businesses, which we are incubating at this point in time, be it the Syntex business, be it the DIP business, or be it the stainless steel businesses, they will also start significantly contributing to our top line as well as the EBITDA numbers. But that's going to be gradual. But having said that, we are absolutely on track. At least we are confident that with our quarter one performance, we seem to be on track in terms of getting to our guidance what we have released to the market.
Still, from my understanding, could you tell me the percentage of the top line that's contributed by the traditional business and how much is coming from the new businesses that you've started?
So today, in the quarter one, probably 70-75% would have come from the traditional business, and the 25% would have come from all the new businesses put together. Because they are all in a ramp-up mode. But this proportion will keep on changing as we get into the subsequent.
Okay. Speak to me about Syntex, because I think there's a lot of expectation as to how you're going to ramp that business up. It's a household name and it's got quite a bit of heritage. But still, the market share has dipped to single digit from the traditional very high levels of close to a quarter of the market, right? How is that ramp up happening, and what are you going to do differently with Syntex?
Alex, you have to understand that this company has been into stress for the last 4 to 5 years. Time, number one, we have been on this driving seat only for last 90 days, 1 quarter at this point, and all what we have understood in this short span of time, is that it is an iconic brand. There's no doubt about it. Okay? The brand recall is huge, and the loyalty around this product is significantly high, which means that the company has been able to maintain its brand recall in the quality and the loyalty despite facing all these challenges over the last 4 to 5 years time. I think so this all now need to be leveraged. All this need to be leveraged through supply chains, optimization, re-energizing the dealers and the distribution network. And that's the journey which we have embarked upon. As you rightly said, it has a historical market share of 24-25%, and it has dropped down to 9 to 10%. And we are very confident that, if we really push all our if we put all the buttons in the right direction, press the buttons in the right direction, re-energize the channels, work around, put our foot on the ground, and everything. I think so. This ramp up will happen. It is going to be slow. It is going to take some time, but definitely we will be there.
So the margin expansion that has taken place and pushed it to 9% plus, what are the contributing factors here? Is this primarily because of the addition of the new businesses, or are there other factors at play in the traditional business?
Both. It's both. See, at the end of the day, as I said, 70-75 major chunk of the business margins came from our pipe business. The blend of the projects what we are doing at this point in time is fairly profitable, and that is clearly getting reflected in our earnings. One of the major component happens to be our US market, and the US market is doing extremely well at this point in time. So that is getting reflected, and this is what we will see as a reflection in the subsequent quarters as well. Because if you look at our US market, we are booked for almost 3 more quarters. If you look at the Indian market, we already have a confirmed order book of almost 300,000 tons and extremely profitable orders, right? If you look at our Saudi market, we are almost have an order book of close to 2 years at this time, at this point in time. So on the line pipe side of our business, the growth and the margins are fairly well protected. All what is now going to happen is that all the new businesses, which is our stainless steel businesses, which is our Syntex business, and which is our DIP business, as these volumes are ramping up and they are gaining market share, we would see the incremental earnings coming up on account of this business. The blend of that will definitely help us in improving our overall basket of the margin.
Okay, so would you then say that 9% plus is a given, and what range should I expect it in?
See, from a guidance perspective, we have given a guidance of 10% in any case, and our endeavor would be in any case to achieve that, and if not exceed that. So that's a work in progress. That's the strategy we are putting up on the ground, on the table, and executing it. I'm confident that we should be exceeding our numbers.
I want to speak about the stainless steel business as well, because we've seen reports of dumping by China, and the government has moved to kind of protect the domestic industry. What are the implications for you per se?
Oh, they are positive, very positive. I think so. It is a very welcome move by the government. There was a lot of cheap imports which was coming in, still coming in. I think so. They have tried to plug in to a large extent. I think so. There are still certain policy measures which really need to be worked upon to completely close that, because this was sort of a round tripping and circumventing the process which was happening. And as an industry, we have taken up very strongly, and the government has been extremely kind in terms of accepting and acknowledging this particular issue and have been taking certain corrective action. Few more need to be taken, and we are working on that.
In your line pipe business, you were talking about the strength of the US order book as well as the Saudi order book. Now, this is very crucial, as I understand it, from the perspective of margin contribution as well, because US is a high margin business for you. And you've said that a third of your order book, I believe, for this financial year is coming from the US in that business. What is the ramp up that you're seeing, though, in terms of order wins, etc.?
So in terms of execution, I think so it's evenly spread out for over the next 2 or 3 quarters. But from a visibility perspective, I think so we are seeing a great traction of business still around in the US. Of course, they need to be booked, they need to be then executed. But I think so from an overall traction perspective, we are seeing a good traction at this point of time in the US, and we are, of course, in Saudi. It is going to be record 3 years, which we can talk about it. And in the Indian business is also, Alex, looking extremely well at this point in time, for a simple reason that all the majors, oil and gas majors, have started putting up their capex plans upon the table, and they have already started implementing it. So we are seeing a lot of traction which is happening in terms of exports. And we are in a very pole position in supplying pipes, line pipes for very critical offshore applications in the market of Australia, Southeast Asia, and Middle East. That is what is another icing on the cake which we will have.
Yeah. In terms of building materials, I think a lot is said about CPVC pipes as well, right? And help me understand if there is a plan at all to launch products in that space, because I think there is going to be capability that you have.
So that space is huge. Number one, that's what we are seeing when we are evaluating at this point in time. That space is huge, and the potential is immense. And on top of it, we have a sort of a network through which we can leverage it. Today, if you look at the Syntax network, it's a pan-India network with 900 dealers and 13,000 retailers. It's a lifetime achievement. Companies take lifetime to create sort of a network which is already in existence. So definitely it is in our consideration that what is that we can do to leverage this network further. And of course, PVC pipes and fittings and adhesives are the options up on the table for our consideration.
Would it require capital expenditure at this point, if you choose to go
major?
ahead?
It will require some capex, but these investments are not that so capital intensive as what our basic understanding is. We are not talking in thousands of crore rupees. We are talking few hundred here and there. But the penetration it can bring and the incremental profits it can bring into this network will be huge. So that's what the study at this point in time we are undertaking.
So would you say then, Mr. Mathur, that you're feeling very positive about the launch of PVC pipes as a business?
I won't say that I feel very positive, but I would say that it is definitely under active consideration. And of course, we'll have to see from a return on investment point of view, what sort of a market size. Because see, whatever we would like to do, Alex, has to be in size and scale. We do not want to be a sort of a tertiary player doing something small here and there. All what we want to do, anything and everything is under size and scale. If you look at what we are doing today in the pipe side of it, we have a size and the scale. On the DI side of it, we have created an asset which is of size and scale. On the Syntax side of it is also something which we will like. It's only a size and scale, and we will bring in products which will further increment that. So I think we are seeing it from various optic lenses at this point in time, and then we take a call.
Mr. Mathur, thank you so much for taking the time. Pleasure speaking with you, and look forward to the next conversation.
Thank you, Alex. Thank you. Wonderful. Thanks a lot.
All right, viewers, that was the management of Welspun Corp, and we've spoken about quite a few of their businesses. There's a lot more we should be talking about, and I'm sure that we'll do so in the next chat. For now, though, I'll direct your attention to the website bqprime.com because there's a lot more that you will find there. Thanks for watching. This is BQ Prime.